Whether you're just beginning your trading journey or you are an advanced trader, this technical analysis day trading guide is here to help you become a profitable trader in any market. That includes stocks, forex, futures, meme coins. If you have a chart in front of you, this is how you trade it to become a profitable trader. Probably one of the most important things to get started with here is market structure. And a lot of people have asked me about this. So market structure and technical analysis, you're going to have higher highs, higher lows. I mentioned this on a few of my strategies and a few of my videos. You guys can watch the playlist down below. But we do have higher highs and higher lows in an overall uptrend here. We then sometimes will consolidate and get this ranging or backward motion here before possibly reversing and going into a downtrend. Now, does it have to reverse? No, certainly not. It can instead keep going up. But usually this is kind of typical of what you'll see, where you'll see an uptrend, some consolidation, and possibly then a reversal to the downside where you're getting now lower highs and lower lows. So this is what we are talking about when we are actually talking about market structure here. So once again, with the uptrend, we're going to have a low, we're going to have a higher high, we're going to have a higher low, we're going to have a higher high, we're going to have a higher low, and another high. In this video, we're also going to cover the Fibonacci retracement. You'll notice a lot with these pullbacks here on these higher lows. These are usually going to be our entry points, and we're looking at certain Fibonacci levels to get in on those retracements there. So same with the downtrend. If we were looking to take shorts, for instance, on perpetual futures, we can look for lower highs, lower lows, another lower high, another lower low, and look for those pullbacks on the lower highs for entries and just follow that continuation downward. So this would be considered overall market structure. So if we take it to the charts here, and I am just on the 1 minute time frame, just going to show you a quick examples of some certain market structure techniques so you can get a better idea of what they look like, because they are not going to look as clean as the textbook examples do. And all of this information in this video I'm giving you can be used on pretty much any chart, right? Stocks, forex, futures, meme coins, whatever you're trading, charts are going to have these patterns. They're going to have these higher highs, higher lows. They're going to have an overall uptrend, maybe some consolidation, and then maybe an overall downtrend. So this is what you need to be looking for when you're looking to enter and exit trades possibly. We'll start with the downtrend here. But you'll see we did have an overall uptrend, right? We were making higher highs here. We have this high, we have another high, we have another high. This is kind of a straight up uptrend almost. But there are higher highs being made here along with higher lows. So we have a higher low, we have another higher low, some more higher lows before we kind of consolidate almost around this area. The trend kind of quits continuing to go up and almost loses momentum. You can tell by these candlesticks here, they're getting more wicks on them. We didn't get like a giant bullish candlestick like we saw here, signaling more of an uptrend. We got a lot shorter or weaker price action candlesticks, and then we started seeing some bearish candlesticks to the downside. So when you see these candlesticks with almost, no wicks, some of them actually do have no wicks on them. But for instance, bullish candlestick I'm talking about here, this one only had a very, very tiny wick at the top, signaling buyers were probably more in control of this move and continuing on that trend upward. Whereas when we are flipping and possibly looking for a reversal here, which I will get into changes of character and breaks of structure as well, so you can tell when a reversal is occurring. So, if you were aiming for longs here, there's going to be a sign you should probably exit a trade and get out. But if we are looking at this reversal here, we'll notice we see kind of almost a dramatic shift. We're getting some bigger bearish candlesticks, and this one even doesn't have a wick on it down here. So not only that, but we do actually get a change of character here. So I'm going to get that into changes of character in the next part. But when you see a downward move like this, for instance, and it comes past this previous, what was a higher low, this could indicate a potential reversal because it did come back past this point. We also do have some fair value gaps being formed. So for instance, here we have a fair value gap, and I realize that may take a little bit of practice to start working on. and seeing those fair value gaps, which we'll get into as well. But as you can see, it did come back into the fair value gap pretty nicely and then came back down, and you got pretty big bearish candlesticks here if you even wanted to look for a re-entry here or something like that for a possible short. If you're mixing up your Fibonacci with this would be a total reversal play. But because we had to change character, we had to break the structure, maybe we wanted to get on this first move, you'll notice it does come up to our 0.5, 0.382. It actually wicked our 0.382. So this is why we are putting our stop losses. I guarantee you there's probably not a 5-minute fair value gap candle. So there is no fair value gap right here, right on the 5-minute time frame where we're usually putting our stop losses with those candles, as I go over in my other strategies in my videos. But if we are to move to the 1 minute, we can certainly use the 1 minute fair value gap as a stop loss area. So instead, we could put, maybe our entry at the 0.618, our stop loss just above that bearish fair value gap candle, and we can aim for a take profit at 1.272. If you want to try to risk a little bit more, you can aim for these other levels like the 1.618, the 2, or the 2.272. Kind of up to you how long you want to hold it for there. But that would be our risk to reward of 2.59, meaning if you were to put in $100 on this trade, you lose. So it hits your stop loss, you lose $100. If you win and it comes down to this 1.618 level, you win $259. All right. So this, like I said, is just kind of a quick synopsis of that and kind of the strategies I go overall. So this would be overall higher highs here. We're going with a general uptrend. A lot of times we are looking at a trend continuation here, especially if we're hitting kind of early in this trend, right? So if we were looking right here and entering in on this pullback for that continuation, we're pretty early in this trend. Now, when the trend starts to get larger, like up to here, you probably don't want to necessarily be continuing on with that trend unless there's some significant, maybe a candlestick pattern or price action pointing that out to you that you should continue on this trend. So let's take a look at a downtrend now. So for market structure, we are on a downtrend. If we were looking to take shorts, we would be looking for those lower highs and lower lows now. So you'll see we did make some here. We had a high, right? This is our very top of the trend. And then we made a lower high. We had a low. Then we made a lower low. Then we made another lower high. So this is pretty indicative that we are switching directions. And we should probably not continue along with this general uptrend, right? We're probably looking to take shorts now in this overall downtrend here. So that is what you are looking for in those uptrends and downtrends. If we look at consolidation areas, so here's one for instance, and you can basically mark these out, with a pretty solid trend line here. But we were probably coming, it was probably fighting this overall downtrend. We were getting pretty far along into it. This is probably a Elliott Wave here. And it tried to fight its way back upward, but we have this consolidation ranging zone where it tried to push back upward. However, it failed to do so. It just created another lower high here and continued on its way back downward. So you can use your higher time frames as well. They're going to look a lot different than the lower time frames. I'm usually trading on the 1 minute time frame, and I have a lot of strategies based around that. So that is what I'm usually looking at. I like to be in and out of my trades, grab my money and run. That's just me. That's how I trade. It's not, for everyone I'm saying, but that is what I like to do. But you can see we got more consolidation even around this area. So we got a nice range around here, just back and forth in between this kind of rectangle area. So if we were to move this line down, we just got nice back and forth movements in between that area before it pushed up once again, failed to do so, and just continued on its way down. So those sideways areas are these consolidation zones. As you can see here, this is not something I usually trend. If we get like a clear change character, change in a direction, we can look for those reversal plays. A lot of the times you will be looking to continue with the trend, okay? Unless it is a reversal play like we saw at the top. So like we looked at on the chart, we're going to have those higher highs or lower highs and lower lows and lower highs, and it's going to go back and forth in between those trends, eventually consolidating and then go back into a trend again. So what we're looking for is we're looking for swing highs and swing lows here. So these swing highs and swing lows can be great for using your Fibonacci on. Many people have asked me, where do I put my Fibonacci at? I'm having trouble finding points on a chart where to put my Fibonacci at. And I get it because I have been there. It takes practice and really looking at charts day in and day out. And eventually it will become like second nature to you, like walking or talking. You're just going to like see a point on the chart and you're going to be like, yeah, that's where, the end of my Fibonacci should go. This is where the beginning should go. This is how I should draw it. But typically when I'm trading on the 1 minute time frame, something super short, I'm looking for usually the nearest swing high or the nearest swing low that really sticks out to me. So for instance, here would be an example of a breakout as well. So maybe we have a bunch of sellers up here kind of holding it. Finally breaks out. We can also look for a retest of this line for its continuation upward. So buyers on this, once again, have finally stepped in here, creating a resistance and support level. This has now flipped to a support level. It is no longer resistance like it was back here. So we have these 2 points, tried to break through once, came back down, tried to break through again, came back down. So that's creating a resistance level that you would normally see. And then if it does finally break out, maybe it doesn't come back down again, it has now flipped into a support level. And in this case, buyers have stepped in, right? Because this is an overall uptrend. So the buyers have taken over. We're probably looking for a retest of this line or something similar for that continuation upward. So this creates, supply and demand zones as well, creating that support level. So demand here in this case would be greater than the supply, enabling that to push higher upward. While in this case, the supply was greater than the demand, pushing down that price, creating that resistance level. So that is why we saw those push downwards before demand became greater, meaning the buyers stepped in, buyers were demanding more, right? So they're stepping in, creating that support level. And usually, sometimes you'll see it come down and retest some of those support level lines. So you could be looking for entry if you just simply drew a trend line. With those resistance lines, you could look for retests of those trend lines if you wanted to keep it super simple on your charts. So we will take it to the charts now and actually look at some support and resistance levels so it's a little bit clearer. These are kind of textbook drawings, right? It's not going to look this clean on charts, but we can get a good idea, especially once you start practicing, you'll be able to spot these a lot clearer. And I do have a full trading view tutorial for you guys on my channel. I'll put it down below as well in the description if you guys would like to watch that if you're new to TradingView. But a lot of times you can use the support and resistance level as entries for a retest. So for instance, we have a nice support and resistance area right here. So I'll just mark this out as support and resistance. And you'll see it had trouble, right? Just kind of like that textbook example we saw, had trouble breaking through quite a few times. So we had this level, it matched up perfectly with this candle, perfectly with this candle. These candles even kind of wick through it, right? Try to come back above once, came up, resistance, came up, resistance, finally comes up a bit higher. We also get a nice bullish candle. And what do I mean by a nice bullish candle? There is no wicks on this candle. None. There's not even a little one. This is a pretty bullish candlestick here. Granted, we are on the 1 minute. I do suggest moving up to like a higher time frame, maybe the 5 minute or 3 minute to see what it really looks like. But if you do see this on the 1 minute even, it can be a nice little push upward. So you'll see here, it came back, even retested. Had we not seen any of this, we'll just replay real quick. But had we drawn our line, just this resistance area right here, and just drew this straight across these candles, we can go ahead and assume, hey, it's probably going to come down and retest this line. And we're going to see this a lot with our previous day high and lows. So we can look for a retest there. Now, if you wanted to mix and match this with the Fibonacci for additional confluence, I love the Fibonacci. We will get into it. But this is an excellent, yes, I draw my Fibonacci backwards. I am well aware. That is just how I play it. A lot of the times I am looking up for Fibonacci levels that match up for retests of these support and resistance lines, or, for that golden pocket area of that 0.618 or 0.5 area. So if we go ahead and play it forward, you'll see came right down to that 0.5 area. This is actually our golden pocket area. but usually I'm aiming for that 0.618. It also is doing a retest, like we were going over, that resistance line and that support line. And where are we aiming for our take profit at? Usually the 1.272 or the 1.618. Since we are in an overall downtrend, I like to be on the cautious side and be a little bit safer because this is, overall a downtrend, right? So huge downtrend, downward play. So I would only be aiming for that 1.272 level as a potential take profit area. Not saying we can't get a double top at this one level, but we can go ahead and play it forward, see what happens. So you'll see wicked right with that 1.272 level for our nice take profit area. Had you taken this trade, if you take your long position out, entered at the 0.618, which is typically an area I like to enter at, put your stop loss. Do we have any fair value gaps here? So this guy right here will probably be our closest bullish fair value gap. So a lot of these are confluences that add up. You'll see it came through that area of that bullish fair value gap. And if you wanted to play it, you could simply put your stop loss below that bullish fair value gap candle. I would probably put it a little bit below this kind of trend area on the 0.382 level for a safer play, but that's how you would play that. So had you put in $100, funny enough, this is exactly a risk reward ratio of 2, meaning if it hits your stop loss, you'll lose $100. If it wins, hit your take profit level, you'll win $200. So that is how you would play that. All right. So moving past support and resistance, I just wanted to show you, I like to show you a mix of these concepts so you guys can see in real time how to play them with entries and take profit levels. I'm going to go over the Fibonacci next, which is probably one of the most important tools I think you can use in trading. I use it pretty much on all my strategies. I don't think there's a strategy where I don't use it, just because the levels usually line up nicely with another confluence, whether it's a fair value gap or, a retest of a support and resistance line, or maybe a retest of a general trend line. But that is how you would read the support and resistance levels. Next, we are actually going to get into some trend line basics here. So trend line, we kind of already talked about horizontal trend lines with support and resistance, right? However, we're going to have diagonal trend lines as well. So for instance, if we look at this overall downtrend here, we could probably connect a few points, some of these up here, some of these. So looks like, yes, the trend lines are not going to be perfect. You're going to have wicks going through them and everything like that. But you'll see we do have a lot of points connecting here with a trend line. So a lot of people like to aim for those 3-point kind of, where it's touching the trend line a lot. So we have a touch at the top. We have a touch here for this overall downtrend. We have another touch here. And then we finally broke out of this trend line. So a lot of people will play a retest of this trend line for a possible long here. So as you can see, it touched back down right on that trend line for an entry for that long move. I would also say you want to wait for a change of character as well. So you'll see we actually had this candlestick move, and this is technically considered a change of character here. So we have this change of character. We have this retest of the trend line. You can take your fib as an additional confluence and just draw it from a point here to a point here, looking for hopeful entry at 0.618. It just missed it by a hair, just touching this trend line, but it did end up moving back up. Granted, hindsight's 2020 here, but just wanted to show you guys this. This would be your change of character level and how trend lines kind of work, the diagonal trend lines. You can get these retests of the move. So if we connect a bunch of points on this trend line here, you'll see eventually this has a lot of points connecting it, right? So we got our low down here, kind of bouncing off this line back and forth. Granted, these are smaller candlesticks before eventually breaking to the downside. And what do we see? This candlestick, this bullish candlestick here actually retests this diagonal trend line and fights it back and then kind of continues on its downward move. So this is what we're talking about with these diagonal trend lines. A lot of times you'll see those retests kind of like we see with the horizontal trend lines with the support and resistance. These are just diagonal, and usually they can indicate, if you get a retest of these, you could see a potential reversal to the downside. So we were going up, now we're going back down. So that's how you would kind of play those. So I already kind of mentioned changes of character. and breaks the structure here. So this is kind of a cleaner, simpler example, so you can exactly see what I'm talking about. But for instance, for this break of structure here, you'll see we had a change of character, meaning these candlesticks here came past this point here, indicating a potential reversal, came back up. We made a lower high now, and we continue to make another lower low up this low. So these are all market structure concepts we went over. So you could probably potentially, if this was an uptrend, look for shorts here, right? And then we get a break of structure as well. So after that change of character usually comes a break of structure. And then here's an example of a change of character, right? Came past this candlestick point for that move upward. Back to general market structure here, we're going to have our higher highs, our higher lows forming here. We are then going to see this would be considered a change of character here if it broke past this point, and then we have breaks of structures next. So same with the downtrend. We're going to have lower highs and lower lows instead. We're just looking for those changes of characters and those break of structures to continue on that trend and make some money from it. So here's a break of structure. Here's some more break of structures, just some quick examples for you guys. And then finally, the break of structure usually signals that continuation of a trend. You will see pullbacks on break of structures, kind of like you see here. So these could be potentially good entry points to draw your fib with. So this could signal a break of structure, right, to enter in on the continuation of the trend as long as the trend is not too far in play. So next we have a change of character here. And this is kind of what we talked about in the beginning with those potential reversals. We get some weaker price action candlesticks. By weaker, I mean we have these littler candlesticks, right, with wicks on them. They're just kind of little. There's not these big bullish candlesticks like we're seeing back here that signals to us that we are getting a continuation of this trend. This could signal a potential reversal or a trend reversal in the trend, possibly consolidation as well for maybe a continued push upward. You just got to kind of wait and see what the chart does. But the next thing we would be looking for if we were going to take a reversal trade would be that change of character. And that is exactly what we see here with these bearish candlesticks. Potential change in the trend is the first sign of reversal here. Unfortunately, in this case, that did not happen, and this will happen often. You're not going to win every trade. So this is why I do point all this information out to you guys, but we do have a change of character. We get another push upward. Instead of making another lower high, we actually are starting to make higher highs, right? And we're getting some higher lows in. So signaling that this trend might continue on this upward momentum, might have just had a little bit of consolidation here and then continued on its way with this trend. So for instance, yet again, kind of a textbook example, but we have lower highs, market structure again, another lower high, lower lows here, continuation of that downtrend before we start seeing some higher lows being made. So we're flipping the switch here, signaling we could get a potential reversal. We are entering right off the bat here. We are waiting for that change of character to take place, which it does occur here. So our first kind of signal is we are getting some higher lows here, and we're also getting a higher high potentially as well. So now we officially have this change of character taking place, meaning it came back down, pushed back upward, coming past this point, and now we can potentially look for a reversal to the upside for long entries here. So now we actually have a break of structure as well. We made a change of character. We made another break of structure at this point, came past this point here. So change of character is kind of the first sign. This point came past this point here, and we can look for those long plays with our Fibonacci levels. If we take it to the charts here, I will show you another example, but overall, we were in a steady uptrend here. We are on the 1 minute time frame, so these are scalping entries, but we are getting in and out of trades, I would say, anywhere from, 5 minutes on average to 1 hour is how it normally works for me. Sometimes my trades take like 1 minute if we're hitting a market open. So usually we're in and out of trades pretty quickly, but as you can see here, we were in an overall uptrend. So we even had, I'm not going to get into Elliott Wave on this video, but this could signal the possible end of a trend here. So we probably got 1, 2, 3, this might have been third. So we were kind of seeing an Elliott Wave here, and I'm not going to get into in depth on Elliott Waves, but on the fifth wave of an Elliott wave, this could signal the end of a trend or consolidation before continuing on with the trend. You really have to wait and see with that fifth wave. This is why you typically don't want to enter too close to the end of the trend. You got to kind of pinpoint where you're at in the trend. Usually your third wave is going to be the longest here. So here would be our third wave, our fourth wave. We'll sometimes retrace all the way back to our first wave, just touching it. You don't want your fourth wave to come past your first wave. A lot of times your fifth wave will be along with this trend-based fib here. You'll see our fifth wave actually came up perfectly to this 3.618 level. A lot of times you'll see the third wave around this 1.618 level is what I normally see. So you'll see it kind of came up past that point to that 2.272. Nothing's going to be perfect in Elliott wave or in trading, but this is how you kind of use that trend-based fib extension to exactly see where you're at in the trend. If you're too far in the trend, you probably want to be looking, or waiting to see which way it's going to go. And to use this trend-based fib extension here, if we're looking at a long position, you just click on the bottom, click at the top, drag it down, and click towards that bottom of that first wave to see exactly where you're at. So that's how you can use the trend-based fib to see where you are exactly at in the trend. Once again, be careful on those fifth waves there, as they can sometimes come down for a reversal like we're seeing here. But as you see, we are getting a change of character again. So we actually have one right here. We got a nice kind of change of character off this low here. We made a lower high. We made another lower low off this low. So this I would consider our change of character area. So we are no longer looking for longs in this case because we made a change of character. This could be a potential reversal. This would be our break of structure area. So now we could potentially look for shorts. We're no longer continuing on this uptrend, it seems to be. Why is that? We have a change of character. We have a break of structure. We have market structure, which is signaling these lower highs and lower lows to us. We're also getting some pretty bearish candlesticks, right? No wicks on this guy. I mean, a little one at the top. No wicks really on this guy. Also, we have this bullish candlestick here. And this bearish candlestick actually came back down, this bullish candlestick, indicating a potential reversal as well for that 3 candlestick pattern. But these are all indications to me that we could be reversing. Now, once again, you need to take your fib retracement. You can go ahead, mark this from the swing low to the swing high. Now, why not this swing high, right? Why this swing high? I typically, like I said, not always, but I'd say probably 80% of the time, I like to take it from the nearest swing high that sticks out to me. And we are on the minute chart here. So this is a point when I'm looking at the chart, it sticks out to me. Yes, this point sticks out a little bit more, but this point actually sticks out really well to me as well. I mean, if you even narrow your chart and scroll further, right, you can see that point sticks out pretty well once again. So we're just taking it from our nearest swing low to our nearest swing high and marking that off. And then we are looking for, that 0.618 level, 0.5, anything that kind of matches up with a support resistance level, however you kind of want to play it. But let's go ahead. Let's say we are aiming for 0.618. Our stop loss, we can actually look for a 5-minute fair value gap here. And I teach this on my other strategy videos. Woo! This is a big bearish candlestick on the 5 minutes. So this is why we move to higher time frames, to see what is happening. Why is this a bigger bearish candlestick? There's no wicks on it. Once again, we are on a higher time frame. This would for sure signal to me that we are probably looking for a move to the downside or a reversal play. So our stop loss, I like to put it just above a 5-minute fair value gap candle. So if we take this candle here, mark this in red, and you can see this is our fair value gap stop. A lot of times price will like to come back into these fair value gap areas. I'm just going to keep it super simple for this play though, and say we're entering at the 0.618, we're getting out at the 1.272. So our stop loss be just above that fair value gap candle, which is this guy right here. There's no wicks on it, so we can just put it somewhere right there. Just makes sense to me. If you wanted to look at the 0.5, which lines up nicely with this fair value gap midpoint, you could certainly do that. Now you're at a risk reward ratio of 1.7, meaning if you're risking $100 here, you can win $170 if it comes down to your take profit level. So we'll play it forward. So it comes all the way up to our 0.382, almost hits our 0.17, and all the way back down to 1.618, right? So whatever entry that matches up with a bunch of these confluences, that's what I'm usually aiming for, and that's pretty much exactly what we saw with this change character reversal play here. So those would be changes of character and break of structure. Next, we are going to get into the Fibonacci. So by far, my most favorite tool on TradingView or any chart really is using the Fibonacci. You can really determine some great entry levels and some really great take profit levels off of it. So Fibonacci is actually everywhere in the universe. So it's on trees, it's on flowers, it's on shells, it's on the human body, it's mathematically everywhere, which is really cool. You guys can feel free to look more into that, but it is everywhere in our lives. So not just trading. And why does price normally come down to these levels? A lot of times we'll have algorithms, bots, people placing their orders at these levels, which is why it tends to come down to these levels and why it works so well. So if we take it to the charts here, we can actually take a look at Fibonacci entries, which are by far my favorite, mixed with some fair value gaps. And if we were just do another random bar replay. So if we are looking for entries with our Fibonacci, usually we're looking for that golden pocket. Typically that golden pocket is around that 0.618 range I always talk about here. All right, so getting into the Fibonacci here, I will go ahead and take my Fib retracement tool. And we are typically looking for entry around this 0.618 or 0.5 level. Those are usually our normal entry levels. I usually like that 0.618 level. So as you can see here, we have an overall uptrend going for us. So we can go ahead. We have higher highs being made, right? We have higher highs being made, right? We got a nice solid bullish move here. So we could take our Fibonacci, draw it from the top of this point if we're looking for a long position, down to the swing low here, which is this point down here. You'll see we do have candlesticks here. However, there's no like definitive, I would say, points that are sticking out to me. This is just kind of a straight uptrend. We need some more definitive points, maybe like these or even this or this. You know, you want a definitive point in the fib to draw your Fibonacci from. Just don't want a random candlestick in the middle of the trend. So that's why we're drawing it from that point here. We'll play it forward. We'll see what happens. So as you can see here, it came all the way down to our 0.382. So not exactly perfect with that 0.618, but you're never going to be precisely perfect on all your entries. I do like to mix and match these with fair value gaps. So if we saw a good fair value gap here, let's see, we were back here. So we draw it from here to here. We have a huge bullish candle on the 5-minute. We can actually draw it, our fair value gap. So our fair value gap is 3 candlesticks, 1, 2, 3. It's always in between 3 candlesticks. This is a bullish fair value gap, so I will make it green here. And what's cool about these fair value gaps, sometimes they'll just touch it at the very top. Other times they'll come all the way down to the midpoint perfectly, like it did here, which matched up with that 0.382 or 0.5 level. So this is an additional confluence you can really use to pinpoint your entries better. Instead of just aiming for that 0.618, you can be like, oh, I have this nice bullish fair value gap. Price is probably going to come back into down here. So this bullish fair value gap is just this wick to this wick on this first candle here, creating a gap on this candle. A lot of times price will like to come back into that area for fair value gaps. So we wicked down to the 0.382. It came all the way up to our 1 level. I'm not sure if it's going to be able to hit our 1.272 here. You'll also notice this is our 200 EMA here. So if you just type in indicators, you type in EMA, you'll see there's the 20, 50, 100, 200, and you can pull up that 200 EMA. A lot of times it will try to touch this EMA again, which it whipped nicely, perfectly through. We do have a lot of resistance as well. We talked about support and resistance earlier. By resistance, we have all these candlesticks coming down into that 1 level. So that is going to be a huge resistance level to get past for this solid uptrend to that 1.272. With all these candlesticks back and forth in between this fib line, we're going to see probably resistance there, and who knows if it will continue on this overall uptrend. We may have wanted to just aim for that one level because our 200 EMA was there and we had a lot of resistance through there. However, we'll play it forward, see what happens. So let's go ahead. Had we marked our entry, say we marked it at the 0.5 because it was inside that bullish fair value gap. We put our stop loss just below this 5-minute bullish fair value gap candle. So with that wick, here's the wick, here's a fib line. I put it just a little bit below that fib line. So we can go ahead, once again, might have only hit the 1 on this one. We are making a lower high now here and kind of cruising back downward with that overall downtrend we saw. If anything, it's probably consolidating around this area, but we are making lower highs. Had you waited and held this trade, not exited up here when it hit that 200 EMA on the 5-minute, you would have lost this trade if you had waited to that 1.272. But this is just an example of how you can see that support and resistance as well. So we had a lot of resistance in between this 1 and 1.272 level. You can see all the candlesticks moving back and forth in between that level. You can also see a ton of resistance, with these candlesticks moving down into that one level. And then not only that, but our 200 EMA here, which I really only keep the 200 EMA up. A lot of times price will like to gravitate back towards this 200 EMA and touch it. So it did come back up, touched it perfectly on this move, and then just wicked right back down. So these are all signs and what you need to be paying attention for on the chart. Like I said, we had a lot of resistance around this area, so that's something to pay attention to. And these are all additional confluences I look for, especially when I'm live trading with people, just so I know we're not like making a bad move here by not getting out in time. I mean, you can clearly tell, especially on the 5-minute here, we made a bearish candlestick, a pretty bearish candlestick to the downside, bypassing this bullish candlestick, signaling it's probably reversing. You should probably get out and not wait for your 1.272 level to hit for take profit. If we were looking for a Fibonacci to the downside, I'm going to just draw some points so people can see how I draw these, but here would be a swing low to our swing high, comes up to the 0.786 in this case, then comes back down. So we'll look at a couple other points here. I'll look at some really weird consolidation levels. So we have this overall trend here. Now, where do we place our fib? So if we were just seeing this area, for instance, let's say we don't know what's happening quite yet, but we can just draw our fib from the swing high to the swing low here. So like I said, I usually just keep it with the nearest point sticking out to me. We have these wicks going into it down here. They can always just stick with kind of the nearest point to keep it simple in your own mind. And we already kind of saw this play out, but there it is. Mr. 1.272 by a hair. Unfortunately, that first time. We'll look at some other areas as well. So I'm trying to find kind of harder area to tell where your fib would go, just to show you. But let's say we were looking for an entry here to the downside, since we did make some lower lows, right? We got lower lows. We have a lower high here off this high. So we are in an overall downtrend. If we draw our trend line, there's this kind of overall downtrend we're seeing. So we could probably aim for shorts in this case. So we can simply draw our fib. And with this, I'm probably going to match it up here. Not with this point. This just kind of looks like more in the middle of the trend to me. This becomes more second nature as you get practice in and you start drawing your trend lines out and everything else. You just got to put in the practice and put in the time to actually see what's going on with the charts. Only came up to that 0.786 level and then came back down. So here would be kind of another area where it could be hard to pinpoint, hey, where do I put this Fibonacci at? So in this case, could put it here to here. Here's this point kind of sticking out to me once again. Comes back down through that 0.618, comes up to that 1.272. That was just with the nearest swing low here with the swing high. So 0.618, you could have put in an entry here to profit at 1.272 here. And like I said, this can apply to any chart, stocks, forex, futures, meme coins, whatever you're trading. All these concepts can apply there. You're going to see it on multiple different chart patterns. Yes, charts do move differently in each market, but a lot of these concepts apply to the same thing. But you'll see even that point right there, it sticks out pretty well from the rest of this trend, right? So why didn't we put it all the way down here? We could have, certainly. We're drawing at the top here. So had we seen this point, it only came down to the 0.786. However, I see this kind of point sticking out and it's nearest to it comes down to the 0.618. So let's find some other kind of areas where it could be hard to decipher where we should draw. So for instance, a lot of times we can have trouble. We have this point here, we have this point here. Where do we put our fib at? I'm just going to go with the nearest. We'll see how it works out. So fib here to here. You'll see once again, came up to that 0.618, came back down to our 1.0, came all the way down to the 2 level, almost 2.272. So pretty nice there. I'm just going with the nearest points that stick out to me. So this point, if you scroll up your graph, even like this, to super narrow, you can see that point sticking out there. That point sticks out to me. Yes, we have this top here, but I just go with the nearest points on the graph. So I hope that helps out with the Fibonacci retracement. That is basically, I mean, I do use RSI, I do use MACD here and there, I do use money flow. A couple of indicators I will show you real quick are the fair value gap. I love my fair value gap. So fair value gap by Lux Algo. This will automatically pull up any fair value gaps on your chart. So you'll see all these bullish fair value gaps here. And this is where price tends to like to come back into these boxes that you'll see on the chart. You'll see a lot of them. A lot of times the chart will come back into the price and match it up with a fib level like the 0.618, 0.786, the 0.5 levels. But a lot of times price will like to come back into these fair value gaps here. So we have a fair value gap up here. It wicked nicely into and came back down. So that is one indicator I definitely use. I use the RSI as well, mainly to spot divergences and see if we're overbought or oversold. If we're on the 1 minute time frame, these are going to be less accurate, especially with the divergences. So if you see one divergence on the 1 minute, I've come to realize is it's probably more than likely just pullback. If you're seeing multiple of them though, maybe something like this. So we got a bunch of bear divergences and it kind of tapered downward. Then we got a little bull divergence. It's not even a wide one. And that was just kind of indicating a potential pullback on the 1 minute. As you move to higher time frames, these will be more accurate, like the hourly here. So we have a bull divergence here. We got a nice upward movement. Same with here. We got a bull divergence. But on the 1 minute and 5 minute, if you're seeing just one of them, a lot of times it can indicate just pullback. However, if you see multiples of them, it can indicate something bigger, maybe a trend to the downside or upside, whichever way it's going. So a lot of people ask for my settings on this as well. Here they are up and live. Here's my settings for the RSI here. RSI length is 7, source is closed, type SMA, length 3, BB3. And then if you want to see this bullish and bearish divergences, you can simply select style. So we got a bullish, we got bearish, bearish. So anytime you see a divergence, what is a divergence exactly, right? So here it says bear, right? So a divergence is this, kind of almost made a double top here, while this is going upward. So this is different than this, indicating a divergence, or we could see a turn to the downside. That is not necessarily always true, so don't always, play with, oh, I'm going to enter when I see a bear divergence. That's not always going to be the case. You got to match it with other confluences like fair value gaps, Fibonacci, overall price action and market structure in order to determine if you should enter short into that trade. But it's definitely a little helpful indicator with that. So that is how I use the RSI. For instance, this bull divergence here, we did get a bull divergence. So this is going up while our chart is going down, creating this bull divergence. However, it just kind of consolidated and continued downward. More than likely, you would have been stopped out of this trade had you taken a long. So had we taken a long from here to here, I don't know. Yeah, so you would have been stopped out, even if we were playing with this red line, stopped out of this trade. So that's why you don't just play with the divergence, but there they are on the RSI for you to see. We also have oversold areas. So when this turns red, that means it's oversold, and we could potentially get some buyers into the mix to bring it back up to a healthy level, like the midpoint, or maybe up back towards, it likes to gravitate in between this 80 and 20 level on the RSI. You'll see it moves backward and forward throughout it. So you are looking for those areas. A lot of times these overbought and oversold levels, if you are in a trade, they can indicate, hey, I should probably get out of this trade. It's overbought. It could come back down, right? It could potentially come back down. So here it came back down. Granted, it was just a pullback and then came back up. But these can be good indicators, especially on the higher time frames, indicating if you should get out or stay in a trade. So we're overbought here, we're oversold here, we're getting some red highlights, oversold, oversold. Like I said, it can go as much as it wants. We got a bunch of oversolds here and it continued downward. Just kind of keep with it, and you got to read the charts and really play with it and learn these settings. Anyways, that's my overall technical analysis video. If you guys are interested in learning more about technical analysis, that's pretty much what I specialize in. It is something I love. I love to learn about. I enjoy doing it. It has made me become a profitable trader. Instead of just guessing and gambling, we actually have all these technical analysis concepts to really help us out here. So these are all, of course, available in the course on the paid side of my group. I just like to show this, in case you guys are interested in learning more about technical analysis and strategies you can trade. It is here. I also do live trade perpetual futures every morning, every night, unless I have family things going on. Once again, we all need a break here or there. But I do my best to trade every morning and every night. They are recorded. They are uploaded to WAP in case you guys want to do that. I also do my best to post my trade ideas as quickly as possible while we are live trading in the group. I have all the trade ideas here, our entry, our TP levels, our stop loss, anything else I'm kind of seeing on the charts, along with a little daily analysis of what we're seeing for perpetual futures tradings. We actually had a pretty good day today. We took 3 trades this morning, all in about inside of an hour and a half. So it's pretty nice. We had 2 shorts, 1 long. They all went smoothly. Not saying they will every day, right? I can't win every trade, but I really do my best for you guys to, make better, give a little trade recap on what I'm seeing on the charts so you guys can get better as well. This is all available in the Smart Trades Insider Circle if you guys are interested. If not, that's cool too. Once again, drop your comments below. Let me know what you want to see on my next videos. I get tons of questions about technical analysis, so I really wanted to cover this for you guys, and I will talk to you soon.